Hey guys, so it's that time of the quarter again. Cleanspark update. I think it's sort of fair that I do a video on this sort of pretty much once a quarter now that it's quite away my largest position. Just sort of for my own peace of mind more than anything. And yeah, to see whether it's sort of worth carrying on holding sort of for the rest of this crypto bull market. I have to sort of be aware of obviously we're not allowed to hold a Bitcoin ETF, a decent Bitcoin ETF of any kind in the ISA. So while I do sort of want to hold something crypto related, certainly for the next year, I would have thought if I do sort of see CleanSpark as not really worth it, then it's not as if I can sell it and just buy the BlackRock Bitcoin ETF, for example. So I may have to hold CleanSpark or something similar, even if I do think it's a bit overvalued, just to gain that Bitcoin exposure. But obviously there are alternatives, MicroStrategy and Coinbase and other miners, I guess, potentially. But yeah, I'll have a weigh up and see what we think. So we've hit $20, which is obviously very, very profitable. I guess for pretty much anyone who has bought, probably quite significantly in the green. Certainly, sort of when I was making the first video or two, it was around the sort of $3 to $5 range. So yeah, looking at sort of 4 or 5x from there. I think it's only sort of very briefly been above where it is now, sort of $22, $23. Very, very briefly. It doesn't even really show it on here. But yeah, so 4 billion market cap is getting quite large now. Obviously, the other large miners, Riot and Marathon, are bigger than this. Well, actually, I think Riot, if I recall, have overtaken Riot now. Yeah, so Riot are struggling a bit. I've not really sort of looked at their operations all that much. Just sort of having a glance. Yeah, February production update produced 418 Bitcoin, so not particularly good. They were sort of soaring ahead of CleanSpark in production before. So I think Marathon are sort of pushing towards 50 exahash now. So they've sort of diverged quite a lot. If I recall right, had quite a lot of Bitcoin on the balance sheet, so maybe they're still sort of going that way. But yeah, 3.13 billion versus 4 billion now. So CleanSpark, I'm guessing, are the second biggest miner out there behind Marathon. So rather interesting. But yeah, let's have a look at some numbers. So their investor presentation is quite nice as a sort of intro if you sort of want to have a look at them for the first time or sort of show somebody else. But for people who sort of know a fair bit amount of CleanSpark, there isn't sort of too much in here for you sort of interesting tidbits. So they give a sort of rough guide of how many miners they expect to be at and sort of how many they're going to have at their various stages. So 106,000 currently deployed. That's a little bit old because that's still while they were at 12.5 exahash. They're saying when they get to full deployment, which is 32 exahash, they'll be at 215,000 and then 315,000 if they exercise their option to purchase up to 50, but that is an awful long way away. And they sort of give you an idea of that in this chart, the projected path to 50. So yeah, they're saying current 12.5. Again, they're a little bit sort of more closer to this first half 2024 number actually. I think the February Bitcoin mining update, they gave current exahash of 16, so they have sort of got some of this online now. And yeah, that is the sort of Mississippi and Dalton complexes and some of the Sandersville expansion. And yeah, they're sort of purchasing more miners and installing those, and they're looking to be at 20 sort of fairly shortly. They're saying before the end of June, basically. I think they will get there sooner than that. And then second half of the year, they're going to hopefully install their 12 exahash of Antminer S21s that they've purchased. And then they have an option to go for another 20 exahash worth, which they've secured the price of. So they're not going to be paying a fortune sort of in the bull market, assuming we get a strong bull market. But I'm not really focusing on this 12 or the 20 because we don't really know how they're going to sort of fund it, how they're going to actually deploy that. They've sort of said this requires additional infrastructure to support the 20. So, a bit like this, buying existing sites and installing the new miners in those, or building new sites from scratch, which would require an awful lot of capex, and sort of whether they would borrow money or dilute shares to get there. They might be able to do some of it from cash flow with a strong Bitcoin price, but we don't really want to sort of guess at that. And yeah, the 50 exahash, is a little bit pie in the sky, really. That's going to take sort of most likely hundreds of millions, and yeah, they would need to sort of dilute for that. Although, I suppose at 4 billion valuation, it would take a lot less shares than sort of when they were at, $3 to $4. So dilution may not be quite as painful as it was before to sort of raise a similar amount of money. But so just looking at the February update, they mined 648 Bitcoin. I'm guessing part of this is sort of winter curtailment as well, so they get a little bit of income back on shutting down for a little while, and maybe sort of this sort of number would be a little bit higher sort of in the spring or summer. But then you've got ordinals sort of coming down a little bit, and sort of coming off. They had in the December update, it was over 700 Bitcoin. So yeah, it's come down a little, and I'm looking to project this sort of number going forward. They've got 4,218 Bitcoin on the balance sheet, which is pretty good. They seem to be sort of holding as much as they can, or hodling, as they say. I did like in the investor presentation, they give a little glossary of terms, and they put hodl right at the bottom, meaning hold on for dear life, which, if they know their history, it seems they don't know their history, because it doesn't mean hold on for dear life. That seems to be what Wall Street have assigned to that abbreviation. They should look into their history. And you had the quarterly results for end of December, so this is even more out of date than the investor presentation, which was sort of mid-February, but it's sort of good for getting at the costs. We know sort of revenue from the monthly updates, but yeah, this is good for sort of getting at costs. The balance sheet stuff isn't very helpful. Cash is most likely now wrong. The Bitcoin amount is wrong because they've got more Bitcoin and it's at a higher value, so that's sort of all basically useless. But debt is quite good to see. They are still pretty low debt, which is handy. Sort of looking at about 14.5 million of debt, which is very, very good. They're not spending revenue servicing debt, which would be very harmful, and that is what put people like Argo Blockchain out of business pretty much. So the costs is what I was really keen to update my model with, and they've sort of given this cost of revenue exclusive of depreciation and amortization costs at 28 million, just under 29 million, which is a bit lower than I was expecting. Whether this, I'm not sure where the sort of revenue and sort of lack of costs for when they're shutting down would come in. Maybe some of this would include some sort of shutting down, and in the summer that might be a little bit higher than that. So I was sort of looking at the full year 2020 fiscal year 2023 costs, which I think was September to September, and just sort of trying to get a feel for where they're going to be from. I'm basically annualizing from when they get to 20 exahash as a sort of rough guide. As I say, I'm not really looking to try and guess where they're going to be once they get to 20, once they get to 32, because we don't really know how they're going to get there. So I'm basing pretty much all of my calculations on annualized 20 exahash after the halving, and sort of trying to go from there. But yeah, they're sort of using these other figures. The gain on fair value of Bitcoin, I sort of think, is a very dubious figure, but I am sort of putting an amount into my model now for that. And depreciation, I've sort of put in and tried to make my best estimate on that, on where they're going to be sort of at 20 exahash, although it's not a obviously a cash flow item. So getting to the juicy bits, the model, it's not obviously an exact science. A lot of these figures are sort of based on relatively vague assumptions, but I do think you have to sort of put something in just to get an idea of where they could be. Revenue is sort of a little bit easier to predict, depending on how much they're going to mine. And so, yeah, that's based on various Bitcoin prices, as you can see here. This would be, I guess, sort of an average for the year. Not necessarily sort of mining at that for the full year, because obviously over here we've got sort of $100,000 and $120,000. We're a little way off that yet, but if we sort of said these sort of prices as an average for the next year from the halving, I think that's potentially achievable. So yeah, revenue is sort of based on that. Direct costs is taken from the last quarterly and sort of annualized up. I've sort of doubled this on the basis that they're going to have a fair bit more, obviously times by 4 to get the full year. And yeah, I've been sort of playing around with this number, sort of thinking it might be a little bit more in the summer, but decided on this figure. Depreciation similarly, sort of adding on a load more. They've obviously got the new rigs and purchases of new facilities. So yeah, come to sort of that as a figure, and that does leave us sort of gross profit negative all the way up to $60,000 Bitcoin. This isn't what they report, but this is basically where I see it as the model. And then yeah, taken general admin and stock-based compensation and sort of multiplied that up, sort of given it a similar figure, anticipating more staff with the extra facilities. So I've added 50% onto that and annualized that up. So just changing this around slightly, I've changed the gain and loss on Bitcoin from before, and this is sort of based on 5,418 Bitcoin on the balance sheet, sort of based on what they hold at the moment, plus another 2 months of mostly hodling whatever they mine, and yeah, so sort of what they would report in a couple of quarters maybe. This isn't sort of what they would report in a year, but I've sort of said the whole balance sheet worth of Bitcoin minus about $15,000 worth sort of gives you a figure that they might put on. This line is very, very sort of theoretical, but I am sort of putting it in because they seem to be using it and sort of bringing it forward to EPS figures and adjusted EPS. I'm sure we'll start getting if you include sort of all of this, especially as it's going up. They'll want a report on it going up, and they'll be saying, look, we're profitable because the Bitcoin on the balance sheet has gone up in value. So I do think you've got to do this. So yeah, they sort of as Bitcoin price is higher in the model, this is sort of rising. So That's 5,418 at a $7,500 loss, and then 60,000, that would be flat. 80,000, 7,500 gain, 15,000, and 22,500. So yeah, if we're at sort of huge Bitcoin prices, they're going to be presumably reporting a huge gain on the value of their Bitcoin, and then that sort of feeds through to profit figures. So yeah, I don't like this line personally. I don't see that as a real gain or a real loss, to be fair. But yeah, I think you've got to sort of project what everyone else is presumably going to be thinking. So operating profit, that does take you negative all the way until $80,000 Bitcoin, which is not ideal. So interest expense is pretty low because they don't have a huge amount of debt, and they are earning a little bit of interest on the cash on the balance sheet at the moment. I think they're earning more interest on the cash than paying on debt at the moment, but I'll just leave this in here in case they need to sort of borrow a little bit more. So that's just being a little bit cautious, and it's tiny numbers compared to sort of the other deductions around here. And then income tax is actually sort of showing as a gain when they're losing money, but then yeah, once you sort of get to $100,000 and 120 Bitcoin, that suddenly goes negative. And then yeah, net profit is again net loss until $100,000, even accounting for some balance sheet gain. So that's not ideal. Balance sheet cash, and then debt taken off, and then sort of taken the crypto hodl at these Bitcoin prices. So 5,418 at $60,000, they'd have around that on the balance sheet, and sort of increasing, of course. And then yeah, applying a sort of PE multiple based on what the Bitcoin price is. Sort of people getting more bullish around higher Bitcoin prices. So maybe these are a little cautious, sort of 15 PE at the moment as a sort of fair PE, sort of considering we are between $60 and $80,000. Maybe a 15 PE is way too low. Sort of 20 as you get to 80,000, 25 at 100,000, and 30 at 120,000. As you say, if we're in sort of crypto mania and they go sort of significantly profitable, then yeah, maybe you could up these fairly significantly, but I'd rather sort of stick cautious and just sort of see where we are. So yeah, it's not particularly rosy. It wasn't in the last video, to be fair. I was sort of saying you need to make quite a lot of sort of adjustments for it to go super profitable, but the share price was an awful lot lower than it is today. We've sort of come quite a long way with not a huge amount of gain in the Bitcoin price. Certainly not, we're not up to 100 or 120,000 where I was sort of projecting higher numbers. But yeah, I sort of get, based on even $120,000 Bitcoin, if it were to sort of average that for a whole year, I'm getting $25 market cap, and sort of if you were to knock a little bit off for the balance sheet Bitcoin, then it sort of gives you about $22 realistic price. So it's not really all that good. This would be Bitcoin almost doubling, and would be in theory going from $20 to $25 share price, which isn't good at all. You want these miners to be a leverage play on Bitcoin, really. So I would be realistically hoping for a 3x on the price. So yeah, it doesn't look ideal. Big reason for the sort of lower figures is the amount of Bitcoin mined, sort of 5,980. This sort of comes from my table here. Haven't adjusted the market cap from what it was before. We're sort of 4 billion now rather than 696 million, so shows how far we've come. I've even been a little bit bullish with this. This is sort of taken from I went with the January mining update at sort of 577 because it was a little bit cleaner. They were at 10 exahash rather than the sort of February one they were upgrading part way through. And yeah, you sort of said 577, allowing for a bit of drop in difficulty. So timesing by 1.9 to get to 20 exahash, double in hash rate, but losing a little bit of difficulty. Really, I think this should be 1.8 rather than 1.9, but we'll go with that. And then obviously the halving, you're looking at 548. So yeah, that gives you 548 in theory for sort of around April. And then I've sort of assumed that maybe some of the hash rate comes off. People shutting down once the halving. A lot of people have been suggesting that some of the hash rate currently is mining right up until the day of the halving, and then they will switch off because they'll be unprofitable. So you might get a fair drop in the difficulty and drop in the hash rate. So yeah, I've sort of projected potentially like 3 months of the same rather than dropping, and then sort of back on dropping again, sort of a small drop, and then 3% per month, and that sort of gives you 5,980. And I think that is quite bullish, to be honest. We could just see companies carry on mining. You've got various countries mining now, which may sort of get their energy much cheaper and not really care sort of how much they're mining. They just want to be mining. You've got energy companies potentially looking to mine because they get their energy for free, or it's potentially even saving money instead of sort of like with the flare gas. It costs them to burn the electricity. So yeah, I do think this is potentially a bullish amount, and that's only 5,980. So yeah, this doesn't really look ideal, to be honest. Obviously, there's still potential to go to 32 exahash rather than 20, and I'm not factoring that in. They could potentially, if Bitcoin's at a reasonable price, they could be funding the expansion to 32 exahash, maybe buy some facilities. They could be doing that with cash flow, so there might not be any more dilution, and maybe they could get to 32 sort of in the second half of the year. That would be a lot better. Would get this 5,980 number up, but yeah, we don't really know what they're going to do. I've sort of taken 230 million shares, which is sort of, I think, a very reasonable number. It could certainly be higher than this. We're at sort of getting close to that now. I can't remember. I don't think they gave an exact number for the day of the release of the earnings, which they did before. They sort of given the end of December number, which I don't think is ideal. So yeah, I think sort of once they get to 20 exahash, could certainly be at 230 million shares. So yeah, I'd be open to comments from this. Just sort of gauging people's ideas, really. Just sort of taking a quick look at what it would need to get these sort of prices to say 2.5, 3x by $120,000 Bitcoin. I think we'd be looking at probably Bitcoin mined increasing quite a lot. Say they can get into 32 exahash, largely off sort of cash flows or maybe cheap-ish debt, or sort of not too much dilution. Maybe they could get to $8,000. 8,000 Bitcoin a year. Sort of at these two numbers, that takes you up quite a lot, to be fair. Depends sort of how that 32 exahash comes about, and then potentially even the 50. I think the 50 is really sort of, as I say, a little bit pie in the sky. That would sort of take an awful lot of construction or buying a lot of facilities. But I think the 32 exahash is somewhat achievable. Potentially even just replacing some of the older rigs with the S21s. So yeah, there is potential for this rather than sort of at the 5,980 that I had, and sort of other things that I would be even less inclined to do is sort of taking off depreciation, because I'm sure they'll be reporting adjusted EPS or sort of free cash flow numbers. They'll be sort of saying, fair enough, we're net profit, sort of fairly low on net profit, but free cash flow is better because depreciation isn't a charge. But you do have to remember these aren't sort of buildings that are going to be there for a lifetime. Maybe the buildings themselves will be okay, but all the rigs will be, you would expect, fairly worthless in sort of 2 or 3 years. Sort of 2 or 3 years ago, they were buying sort of Antminer S19s, maybe a standard S19J. So those are pretty worthless now. Those would be sort of what they're looking to replace with the S21s. So yeah, you do have to count depreciation, I would say, on sort of a couple or 3 years of a cycle rather than super long as you would with some other depreciation. Yeah, and other than that, I don't know, maybe potentially admin costs not being quite as much. Maybe they can use the same people to manage larger sort of parts of the operations, but I don't think you'd be reducing that all that much. I don't want to start pumping up this gain and loss on Bitcoin number either, because I think that is just a false figure, really. The balance sheet items don't really make a lot of difference. And the only other thing would be sort of pushing up PE. You sort of get to 40, 50 PE maybe. If we're sort of in a raging bull market, maybe people are willing to pay 50 PE. This would be sort of net profit, sort of, even if you count some of the other stuff, maybe net profit of 30, 40%. Maybe that deserves a 50 PE. That sort of gets you to $41 without doing any of this other stuff. Maybe they get to 7,000 Bitcoin. Maybe there's a little bit more in ordinals and fees sort of coming in, and we get a little bit more in mined Bitcoin, even without the extra miners from the 12 exahash. So yeah, that would take you to sort of 60. That's a 3x from here, but that all sounds rather optimistic to me. So I like keeping at my more cautious figures. I want to sort of hold this for the next year, hoping for sort of 100,000, maybe $120,000 Bitcoin. I think, as I say, I would want this to be sort of 2.5x, maybe 3x in price if we're going to get sort of a 2x in Bitcoin. So yeah, it's not ideal. I have sort of said the one of the alternatives would be MicroStrategy, but MicroStrategy has really rocketed up in the last sort of couple of months, I think, to make it quite significantly overvalued. Looking at sort of an enormous rise from 500 just in January, so that's about 5 weeks. Maybe I should have been in this and not Cleanspark, but yeah, $24.19 billion, and with a little bit of debt as well, 26.37. I don't think people factor this in enough. As far as I can see, the underlying software company doesn't make any money at all, pretty much. They've diluted so much to get to this 24 billion and the Bitcoin value that the underlying software company is pretty much irrelevant now. They sort of make 500 million in revenue, and yeah, you can't look at the sort of net profit or whatever because it's affected so much by the Bitcoin, but 500 million in revenue, you're certainly not paying off that debt anytime soon. So I think it is worth including the debt. And yeah, they now hold 193,000 Bitcoin, which at today's price, say about 68,000, is 13.1 billion. So pretty much, including the debt, 100% overvalued, which is not something I'm particularly looking to hold for the next year. Maybe they carry on with this valuation on the idea that they can dilute and add more Bitcoin. They can borrow maybe at 5%, maybe less, and buy more Bitcoin, and that's not something you can do sort of with the ETF. But yeah, I don't think that's worth 100% overvalued, basically. So yeah, I'd be interested in any others suggestions people have. People look at Coinbase. I'm not really sure if we can see sort of a 2 or 3x in Coinbase. I think they're already a fairly high valuation, $62 billion. Obviously, they're custodian of the ETFs for the most part, but yeah, that sort of hurts their underlying exchange business. People use the exchange less if they're just buying the ETF. So, yeah, cannibalizing their own business, really. And could I see this at $150 billion valuation, 180 billion maybe? I think that's quite a tall order. So, at the moment, I'll just stick with Cleanspark, but it's certainly not something that I'm super excited to be holding for the next year. But yeah, so let me know your thoughts, and if you're sort of a holder of Cleanspark, what's your take on it, and are you happy to hold sort of until towards the end of the bull market? So leave your thoughts in comments below, and like and subscribe. See you soon.